Does the mouse own the house? Good Friday morning to you. My name's Jason Graneman, and I'm your lone slayer for the day. You're watching the Economic Market Weather Report. Let's get into it. Well, nothing but cloudy and cool days for the Dow Jones. Well, speaking of equities abroad, everything's kind of down today. Very cool weather over there on the equity side. What does that mean? Well, perhaps we have better interest rates. So more on that in a minute. Dow's at 35,600, down over 200 points again today. So we took a 200-point loss yesterday, another 200 today. So it's stair-stepping down. 200, I always refer to that as kind of flat against what the overall value of the Dow is. But as long as it keeps stair-stepping its way down, well, that could mean better mortgage rates, and today might be a good day. Bitcoin, let's not leave them out of the equation. They are also notably down 57,986 at this very moment. As you know, that fluctuates every second of the day, including midnight. But Bitcoin is still down, so there's some downward pressure. Now, it's not down by much, almost not enough to even mention. However, does that mean that we're in for a bounce? I don't know. But keep your eye on Bitcoin. It's an equity position, so if you're into crypto, just keep your eye on Bitcoin. Notably, Ethereum is up almost 2%. Those two are the two biggest spoken about cryptos. So Bitcoin down, Ethereum up. I don't know. Look for a bounce, maybe. I don't know. We'll see. But definitely worth watching. Now, on the bond market, there's some great news. It is sunny out, not a cloud in the sky over on the bond region. Well, the bonds are improving today significantly. The 10-year is at a 1.53-ish. So 1.5 being that baseline, who knows? So a couple notable viewpoints. One, is that 1.5 going to create a bounce? If so, then as you see, we're approaching the bottom of this new channel. If not, we'll watch it break through, well, when it breaks through, and that could mean even better interest rates. But let's talk about the mortgage interest rate while we're on this topic, because it's certainly having a great effect. With the recent shift overnight in the bond market, mortgage rates are going to be right around 1/4 to 3/8 better in cost, not in rate, but in cost. You're going to find out that as we go on through our journey together, mortgage lenders, mortgage folks like me, watch the cost. The cost will change daily or sometimes multiple times a day. Now, that equals a better rate or a worse rate, but it's all about the cost. And so as we're sitting today, right about 1/4 to 3/8 better in cost than the same rate yesterday. Now, I spoke yesterday, and we did wind up with an 1/8 better in cost yesterday. So as you see, in the last 48 hours, we are better by about 0.5% in cost. Well, that's significant. That can save quite a bit of money. In fact, it could mean getting actually a lower interest rate for the same cost you were quoted a couple days ago. Maybe the same cost a couple days ago equals a better rate today, at least by the difference of about 0.5% in cost. So it being significant, it's something worth watching. It's something worth speaking with your mortgage lender, possibly today. Now, I'm not predicting the future, but we have been in an upward trend in mortgage rates. So when we get a sizable improvement it's notable. It's something worth considering. I'm not advising you to lock your rate. You can make that decision. I'm giving you something even more valuable, and that is information. You having the right information can help you decide when it's best for you to lock your interest rate. But today is definitely a good day in the mortgage market. With that said, mortgages, many lenders, including myself, I have a warning window. And my warning window gives me a warning or an alert. Comes through on my phone and it says, hey, mortgage rates are going to get worse. When the market gets worse, and let's say if it does today, then I'll get a warning. This helps me go in and lock any interest rates for my clients that potentially could get worse, and this might be a good day for them. So having a warning window is very helpful. So what this enables me to do is talk to my clients. They'll say, yeah, it's a great rate. I'll say, okay, here's a strategy. We can hold off because it's Friday. Friday means that my company will hold these rates over the weekend. So I could lock you today, I could lock you on Saturday, or I could lock you on Sunday. Now, what this means is if rates get worse, well, I'm going to miss that opportunity. And why is this concerning? Because rates can change within the day. We call this a midday rate change. So if the rates get really good, again, it doesn't mean we should get comfortable. So on a day like today, being it's Friday, I can work with clients to assess the rate, and if it gets better, well, I can lock it at the better interest rate, even over the weekend. However, if it gets worse, at least I will get a warning, which gives me about a half hour to take action and lock their rate in. This helps to watch the rates throughout the day because we wouldn't want to miss out on an even better rate if that were to occur. Now, in this current market, things are trending up. I don't anticipate the rates getting even better today, but it's certainly a good day to consider, being that we're in a trending up pattern, and the market in the last 2 days has given us better rates instead of worse. So this would be a day that I would reach out to my clients and say, watch my video and make up your own mind. Let me know if you'd like to lock your rate. Now, having that warning is something that is extremely helpful. So ask your favorite lender if they have a warning and let them know that you would like to be looped in on any changes. Or just keep watching this channel, and then you can speak to your interest rate and where you would like to lock your rate in based on the information you have. Is Micky Mouse taking a gamble? Well, Disney is in discussions with ESPN to get into the gambling industry, sports gambling to be more specific. While they've come out and said, well, we may not want to host it on our Disney platform because it could tarnish our image as being family-friendly Disney, we would perhaps set up a platform with ESPN for sports gambling. Now, this isn't some secret news. It's out there. You can look it up yourself. So I'm not sure how the image would be tarnished if you're already talking about your image being tarnished but still want a seat at the table. Now, I don't know about you, but he wouldn't be wearing those gloves at my table.
I thought I smelled a rat.
Remember a few days ago when I mentioned oil? Well, it was a notable mention then. It dropped below that psychological barrier of $80 per barrel. So now today it's come down quite a bit in the last 24, 48 hours. We're at $77 a barrel. That's quite notable for oil. And of course, the lower the oil costs, the happier my wallet is whenever I get on the road. But that's something to watch. Will it bounce back? What's going to transpire going into the holidays? Holidays can be a funky time for trying to anticipate different things in the economy. And remember, we still have that debt ceiling that we should all be paying attention to. The debt ceiling is still an issue that needs to be addressed, and I don't know if that is having any relation to oil, but what the news is reporting today is that oil is down, and they are saying that it's correlated with the COVID situation in Europe. Now, you can do your own research on that, and I encourage you to, but that is the narrative in the news today as of, well, about an hour ago, to the reason why oil is retracting, at least some. $77 a barrel is not necessarily a huge discount from 80, but what it does display is that it was up over 80, about $86 a barrel, not just a week ago. So that's about a $9 to $10 retraction, and that's significant. I mean, that's more than 10%. So keep your eye on oil. It's certainly a good measurement of inflationary times, and perhaps another measurement watching what's going to transpire in the future. Will it get cheaper? Well, certainly my wallet hopes so. Airline stocks, well, they're all down today. Not exactly sure why, except there's a lot of potential discussions about, COVID restrictions, which bleeds over into travel, things of this nature. Now, airline stocks are something that many people don't realize they operate on a very thin margin. Airline companies in general have many, many expenses that really eat into profit margins, and they are an industry, generally speaking, where most of them rely on a very thin margin to display a profit. Now, I'm not saying they're not a good investment, because they can be. However, they are an industry where anticipation becomes very difficult, because it's usually something that's out of the blue, that you can't really expect. Grounding a certain line of aircraft because there's a common denominator problem, something of that nature. It's not weather, it's not truly a large economical type of influence that we rely on anticipation. And when they go down, it's usually a big surprise. Now, I don't know about you, but I don't like to be surprised in the market, and sometimes we can't avoid surprises. However, airline stocks in general are a funny beast. It's not really an industry that has much competition. The airlines that exist, and unless technology comes along to replace them, well, they're always going to have a significant impact on our economy, and always a place that you can invest in because they're in high demand. I mean, what else could replace airlines?
Scotty, beam me up.
Surprise!
Well, maybe that. But for now, airlines aren't going anywhere. However, keep your eye on the airline industry and be aware it's rather difficult to anticipate what can impact your investments in the airlines. Thank you for watching the Economic Market Weather Report. I'm Jason Graneman, your lone slayer for the day. And remember, it's not work, it's a lifestyle. Cheers.
I smell a rat.
Got this rat, this gnawing, key-eating fucking rat. And it brings up questions.